Hello traders and welcome to another video review. Today is Wednesday, March 12, 2025. Let's take a look what do we have in the economic calendar for today. During the Asian session, we got data from the Japan BSI large manufacturing conditions deteriorates from 6.3 to minus 2.4 points. ECB President Christine Lagarde will give a speech at 9:45, and then we got the German 10-year bond auction scheduled for release at 11:30. During the New York session, we got very important data releases. CPI and core CPI data are scheduled for release at 1:30. Crude oil inventories are scheduled for release at 2:30. Interest rate decision from Bank of Canada is scheduled for release at 2:45. Together with the interest rate statement, the market participants expect the Bank of Canada to cut the interest rate from 3% to 2.75%. German BUBA President Joachim Nagel will give a speech at 2:45. Then we have the interest rate decision in Poland, and then we have the Bank of Canada press conference scheduled for release at 3:30. ECB Lane will give a speech at 4:15, and then we got the CPI data from Russian Federation, and at 6 o'clock we got 10-year note action from the US and federal budget balance. So quite busy day with one interest rate decision from Bank of Canada. We will definitely take a look at this chart, but as usual we start with euro dollar. The 4-hour chart of the euro dollar is showing us a movement to the upside. As you can see, we are still developing the wave 3 of the overall 5-wave impulsive cycle. So there you go. We just hit the technical resistance and the target at the level of 1.0940, and then there is a bearish engulfing pattern here. So let me just zoom in. There is bearish engulfing pattern when we hit this level. Now 1.0888 will act as the technical support. As you can see, we pulled back here just a little bit because there is bearish divergence between this high, this high on the chart, and of course the series of the looming highs on the RSI chart as well. Then what do we have is a possible test of 1.0888. In case of a breakout, we go lower towards the 1.0806 and eventually 1.0763. Nevertheless, without strong momentum, the outlook remains bullish on euro dollar. US dollar versus the Canadian dollar. Let's take a look because of the interest rate decision. There is a clearly defined range on this market. One is the high from the February 3rd, 2025, located at 1.4791. This is, of course, the technical resistance, and then there is a technical support at 1.4150. This level here will act as the technical support. The recent movement to the upside had been completed at the level of 1.4540, so this level will act as the technical resistance as well. Then we tested the 100 periods moving average and making a low at 1.2439, so this will act as the technical support, local technical support as well. Since then, the market has been seen moving higher, and it's threatening the level of 1.4540 to be taken out. Basically, this situation looks pretty solid for the bulls. The momentum is strong, positive 57 points, no bearish divergence here, no bullish divergence whatsoever. So as long as we trade above 1.4239, the outlook on the US dollar to the Canadian dollar remains bullish. So that's the US dollar to the Canadian dollar. Let's take a look at the data from the British pound cable. Let's take a look at the cable. For our chart of the cable is showing us a very nice development, horizontal development. We just recently broke above the 61% of the Fibonacci retracement, big thick black line. Then we made a local high at 129.43, but as I said, the market participants, especially bulls, will try to test the level of 1.3 because it's a round psychological number. So far the high was 1.2964, so we are getting closer towards the target level. Right now there's a pullback here on the cable as we test the 61% Fibonacci retracement and 1.2918 level. Again, please notice there is a series of the supports: 1.2865, 1.2832. So definitely the bulls have some kind of a levels that they can rely on. Momentum is strong, is positive, 59 points right now. The market is still out of the channel as we trade higher and higher, so the outlook looks very good for the bulls for now. However, this consolidation here and that movement to the upside, which is not that strong as it should be, so we should just basically move away from the 61% Fibonacci retracement and move away towards 1.3 and higher in order to close all of the bears here in this range. This movement is not that strong enough. It's not that dynamic. It's not that well organized, so it looks like maybe some kind of a partial distribution will take place when we hit the level of 1.30, right? So please stay focused. The outlook remains bullish in the short term. However, it's starting to be worrying, this kind of a horizontal consolidation. It might be gains consolidation, right? 1.2557, 1.2943, nice 400 pips to the upside, so there is something to consolidate. However, it doesn't actually look that well. The longer we stay here, the worse it looks, basically, on the cable. And what do we have here? Last but not least, we need to take a look definitely at the gold market. The gold decided to test this demand zone. The test has been successful. The gold bounces from the 2880 level back above 100 periods moving average on a 4-hour time frame chart. Momentum dipped to the level of 40, and then it's back above the level of 50, which now now it is at the level of 56 points. Again, so still bulls are buying the dip and pushing the prices back above the 100 periods moving average as they prepare to break above 2,930 level to go towards the all-time high at 2,954. So the outlook remains bullish as long as we stay above the demand zone. As we can see, this demand zone works pretty well, so we should see higher prices of gold soon. And last but not least, let's take a look at the Bitcoin. We have a new low at the level of 76,562. So our level of technical supports goes to this, of course, level. We broke below the trend line. We broke below the 100 periods moving average. Nevertheless, the technical resistance at 84,600 is still not violated, despite the very nice movement to the upside as we of course develop the, there you go, let me just take a look here, develop the bullish divergence bounce, right? So we can see that this low is here, this low is lower than the previous low, and the momentum is not that low whatsoever. So we have the divergence, we are bouncing back up. We hit the level of 50 already during this pullback, but the market didn't actually broke above this level just yet. It's quite possible that we will see the test of this technical resistance, maybe even the test of the 100 periods moving average, and then we will see how the market will react on the upside movement, maybe even the supply zone located between 8800, 843 and 90,000, basically 91,000 will be tested as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.